The past few weeks have been some of the absolute ugliest that I've ever seen in the crypto markets in my, 5 years of watching this space day in, day out. The price of Bitcoin and other major cryptocurrencies have gotten absolutely decimated, and people are sitting there going like, hey, can this get any worse? But today we've got some important things coming up that could make things actually worse for crypto in the short term, okay? We're going to look at that and what you need to understand, and also try to determine like, hey, can things get much worse than they already are? Could we be close to a bottom for crypto? Is there any hope, on the horizon? So I'm going to talk about that all in this live stream today, as a blockchain developer who works with this technology day in, day out. And, someone who's been in this crypto space for a very long time, watch these things get really ugly. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to know how to become a blockchain master, which now is the perfect time to do that and focus down and double down on your skills while the space is quiet, then definitely head on over to dappuniversity.com/bootcamp to get started today. Because the future of crypto definitely belongs to the builders, the people who have the skills to help build that next wave of exciting technology that draws people into the space and actually gives this space real value over the long term. That's what I did during the last 2018, 2019 bear market, and man, that really paid off big time. So we got people jumping in the chat here. We got Culture Eyes, Automatic Beats, Technically, Above Realty. Look at the bigger picture. I like that. Lee, Jay, Eric. Let's see here, Douglas, Ben. Welcome. All right, so let's jump into this. So like I was saying before, this has been some of the ugliest few weeks in crypto that I've seen in my entire time here, which I've seen some pretty ugly stuff. And, today we've got some important things that could make things uglier in the short term, okay? So the first thing that we definitely have to talk about is what's going to happen with the Fed meeting and the announcement that's supposed to come later today, all right? So what is this and why is it important? Well, the first thing is, we are going to get clarity on what the central bank of the United States plans to do with their next rate hike for the federal funds rate, okay? So why is that important? Well, the big crash that we've seen with crypto recently is not a crypto-specific problem, okay? This is a macroeconomic problem that's affecting crypto. It's affecting the stock market. You got all these macroeconomic forces that are coming together to cause this perfect storm, and the outcome of this meeting is going to determine, sort of the direction of where things head in the short term after this, okay? So what do I mean by that? Well, I don't claim to be a macroeconomics expert by any stretch of the imagination, okay? But it's like a genius to see that, inflation is a problem. Things are a lot more expensive than they were a few years ago. Housing prices have gotten crazy. We've seen, interest rates at historic lows. Gas is through the roof, all this type of stuff, right? Which comes from several different factors. Comes from loose monetary policy that we've seen over the past several years. It comes from global supply chain issues. It comes from policy, from sanctions, from wars, all this type of stuff, has come together to form this perfect storm to put us where we are. And of course, at the end of last year, we saw the central bank of the United States basically say, all right, inflation is not transitory anymore. This is a real problem. And we're going to start raising interest rates. Okay, so of course, they jacked the rates up, which caused the everything bubble to essentially burst. And crypto, was definitely not immune from that by any stretch of the imagination. And it's absolutely tanked, along with the stock market, okay, and other assets for sure. So the question is, how much longer can this pain endure? Well, we're going to get some clarity on that today with the meeting with the notes from the Fed meeting that's supposed to happen. So basically, we're going to see whether the Fed's going to meet people's expectations for the next rate hike. So again, last year, Fed talked about, hey, we're going to raise rates. They started off saying, well, we'll probably just start with 25 basis points hikes, which means that they're going to raise interest rates by 1/4%. So if, let's say, the interest rate is essentially zero, which is not zero, but it's pretty dang close. So you could take 0, and 1/4 basis point would say, okay, we're going to raise it to 0.25, all right? Another 1/4 basis point would be 0.5, and then 0.75, right? And they said, hey, we're going to do this incrementally over time until inflation gets back to our target. And then it's like, well, we're going to raise them 0.5%, right? Or 50 basis points, okay? And then we had the inflation report come out on Friday, which, there's a lot of people are hoping that inflation had peaked in March, and it didn't peak in March. It came back down in April, and then it got worse again in May, which basically made people just absolutely freak out because they're like, oh my gosh, like inflation is like definitely not under control. And so the Fed's going to have to do something about this. All right. And so their whole idea is that the market is now pricing in. If you look at the futures markets, and basically any financial market where you could actually see what people's expectations are, what they're betting on future interest rates being, everybody's pricing in an expectation of a 75 basis point hike. And up until this point, that has not been really the stated position, I would say, from the Federal Reserve. Okay, so that's the risk of the meeting today. Is basically is the announcement of a 75 basis point hike going to spook markets even more? Stock markets, also crypto markets, basically saying like, okay, like we're going higher rates faster, which is going to be worse and worse and worse for risk assets, worse and worse and worse for growth, which is basically the entire paradigm that everybody's been in for the past 10 years. And, a higher rate environment is really just a complete change in regime. Like we've been operating a certain way for about a decade, all right? And then it's like there's a new sheriff in town. You know what I mean? And the new sheriff is taking over control a lot faster than anybody else expected. I mean, look what we see with interest rates go up at record rates. And so that's one perspective is that, this going up faster than people expect could have a significant impact on the markets. Okay. Now, there are some contrarian perspectives on this, which is, if they don't hike, by 75 basis points and they stay at 50 basis points, that essentially a lot of people are going to perceive that the Fed is basically being too soft and is losing credibility and is not capable of actually taming inflation. And that's sort of an admission of defeat, and that they're sort of just going to make this problem be kind of an anemic solution that's going to exacerbate the problem more over time, and that we're just going to continue to see inflation and it not come down. Okay. So we're looking at a really precarious situation where it's almost like it's hard to know exactly how markets are going to respond to what is said today. And there's also, a very small chance, but a chance that we could see a much higher rate hike than anybody's expecting. So instead of like a 75 basis point rate hike, maybe a 100 basis point rate hike or a 150 basis point rate hike, right? I personally think that's a pretty small chance, but it's not out of any possibility. I mean, who thought that, mortgage rates were going to go up basically, pretty close to double in a matter of months like they have at the beginning of this year. So like, anything is possible, okay? I mean, who thought that Bitcoin is going to go back down to its 2017 all-time high, basically, all right, in 2022. Not many people, like if you'd said that to somebody in, November when Bitcoin peaked, they'd be like, you're crazy. Like, as the Bitcoin price falls and they're like, hey, 7 months from now, 2017 all-time high. Most people would have just laughed you off the face of the planet. But it happened, okay? So we're living in unprecedented times where, the playbook is out the window because we're in a new regime. We're in a new environment. We don't know exactly what's going to happen. Now, that's the first thing to watch out for. Now, let's talk about, what that means for crypto going forward. There is always a possibility that this doesn't really have too much of an effect on the crypto markets themselves. Okay, I do want to talk about that probability, and again, I don't pretend to know exactly what's going to happen today, and there's no way to predict what they're actually going to announce, and there's no way to officially predict how it's going to impact the markets. But it's something to definitely watch out for, and that's the reason I'm bringing it up and talking about it. And so, one possibility is, crypto's already suffered significant losses, okay? And at some point, we're getting to levels where it looks like attractive buys for long-term holders. People are in stronger cash positions than they have been before, okay? And you don't underestimate that, right? Like, crypto prices, sure, they can keep falling, but at some point, somebody's going to say, hey, like, this thing is down, several multiples from its all-time high. Like if I buy now and just wait, like it's probably going to get an insane multiple on that money that I don't need right now. Okay. So like there's always going to be people who have that long-term outlook who are ready to put money into it, right? Dollar cost average over time. People who are smart, not trying to find the bottom. People with lots and lots and lots of money. So that's one thing to consider. And also, I'm super bullish on crypto, the technology long term, and also crypto, prices long term. My big bet here is that major cryptos that have a long established history and a big, user base like Bitcoin and Ethereum, for example, which is my two primary holds, right? That those are going to trend higher over time. Right, you could give all these justifications for why. You could talk about network effects, you could talk about demand, supply, all that type of stuff. There's all really good reasons, right? But just my basic bet is that this is going to trend higher over time. Okay. And, history is definitely an indication of that. A lot of people are doubting themselves now saying, hey, but crypto's never existed in a high rate environment. But that's like the perfect setup, in my opinion, for the opportunity. And that's not financial advice, of course. That's a perfect setup in the opportunity because there is that extra layer of doubt where you've got long-term conviction holders who are like starting to question. And that is precisely one of those things that tends to mark a bottom signal. Okay. Now, I'm not here to say that we are having a bottom. All right. I'm not saying this is the bottom, that we're up only from here by any stretch of imagination. But I did see this tweet come up on my Twitter today. I thought was pretty good. So this is from Rob over at Proof of Talent. So if you're looking for a job in the crypto space, they're a pretty great recruiting company. I figured I'd go ahead and just give them a plug here since I saw this tweet come out. Rob used to have a crypto channel back in the last bull run for Crypto Bobby. So I don't know if anybody was here remembers that, but that was awesome. Anyways, but crypto crash on the front page of the Wall Street Journal. Okay, layoffs at top companies. 2 top 10 cryptos going to zero. All right, Luna, and also I guess I'm about Celsius, maybe. I don't know if Celsius was top 10. CeFi company insolvent. That's Celsius for sure. Hedge funds going bust. We'll talk about that here in a second. Every major crypto down between 65 and 90%. Ain't saying this is the bottom, but the bottom alarm bells are ringing. I think he's right? The bottom alarm bells are ringing. Now, that doesn't mean that this is the lowest price that Bitcoin is ever going to go. That, 20,500 or whatever that low was is the generational bottom or anything like that. It's really hard to say. Could we break lower from here, especially after today's, announcement? We definitely could. Okay. But, I think he's right. We're seeing lots of bottom signals around us. That to me, it feels a lot like we're much, much, much closer to the bottom than we are, from the top, essentially, right? If we've gone down 65% basically on something like Bitcoin, it doesn't feel like we're 65% away from the bottom. Right? It feels like we're a lot closer to the bottom than the top. So that's one thing that I am definitely, that's the camp that I'm in right now. Now, let's talk about, some of the other things that are happening. Some of these mass liquidations that are happening on chain with funds, right? So after facing hundreds of millions of dollars in liquidations, 3 Arrows Capital's future is uncertain. So I don't know how, I've seen kind of mixed things about this floating around on Twitter. Okay. Basically, I don't know how much of this is confirmed, but basically, crypto fund 3 Arrows Capital, we've seen pretty big liquidations and there's rumors they've been insolvent, all that type of stuff. We're seeing reportings on this. We haven't seen any official statements. I think it's very possible. Okay. Looks like, they've addressed their rumors here. Like I said, I don't want to spread fake news. I don't want to, be gossipy because sometimes that happens online and we just don't know things until the facts come out. But it seems probable that that's the case. I know people can observe on-chain positions and kind of, with like wallet labeling, see who's who and like what's happening in their positions. But let's just put this way. Let's take it at face value and say that, yeah, these big funds are getting liquidated. That's another huge thing that happens like close to the bottom in bear markets because you have all this leverage in the system that gets flushed out whenever, whenever these mass price drops. Okay. Now, one big word of caution with this is whenever you see these mass liquidations, there's always contagion risk. So what does that mean? Well, basically, whenever you have leverage, essentially you're borrowing money from other people to trade or purchase or use crypto that you don't really have, right? So the whole idea is like you're taking out a loan from somebody else to make a speculative play or to provide yield this crypto to somebody else to earn yield with the arbitrage, whatever, right? Like you're borrowing money to do something with it to make more money. And whenever you get liquidated, right, it's on these types of things, sometimes you become insolvent, which basically means you can't pay back debts. All right. And so what does that do to people who loaned you money? Well, now they're at a complete loss. Okay. When you have these funds that are doing that, they're borrowing money, they make risky bets, they lose the money, they're insolvent, they can't pay back their lenders. What happens to those lenders? Okay. What happens if you have a prominent fund in the space that's borrowing from like every single lender, right? And what happens? They're taking out loans from all the major companies, all the companies that and OTC desks and all this stuff, right? Like behind the scenes, they're all like loaning money out to the same people because, hey, why not, right? We're not using that. Maybe it's user funds, right? What if you have a platform that's sketchy and like, we're a crypto company. We've got, hundreds of millions of dollars that users just deposited into our app. And, maybe we should take like 20% of these funds and make more money with it. So we'll lend it out to these risky hedge funds that go and gamble it. But then like the hedge funds lose the money and they can't pay it back. And like, oh, now 20% of our user funds are missing. So that's what that's what I mean by contagion risk. Okay. So those are the types of things that people say, well, we lost this much money. We got to cover that somehow. So we're going to sell off some crypto assets to pay back those debts. All right. That's like how you have to, that's what a unwind of risk and leverage looks like. Now, we don't know that it's going to get that bad, right? But those types of things that could cause the next sort of lower leg down. And why I say be cautious, I'm not trying to call a bottom here, but there's lots of bottom signals. And those are the types of things that, could mark the next leg down and it could cause us to enter into a generational bottom, okay? So, we'll have to see whether these types of things are confirmed. And if they are confirmed, what it's going to mean for other people that they are, interacting with. And that's not just the centralized crypto companies either. It's also like DeFi, decentralized finance. When you have all these, products that are promising yield by plugging into one another, a lot of these like Ponzi yield type things, or even stuff that's like a lot more legit, right? You got stuff like MakerDAO, where you basically have all this cryptocurrency that's collateralizing a stable coin, okay? And then like basically how that works is like you mint the stable coin, you deposit like a cryptocurrency that is subject to price change, but then a really small amount of that cryptocurrency, you create a stable coin that's backed by a much larger amount of this, okay? And then the problem with that though is, if those prices drop way farther than people expect, then like you can start to see liquidations inside those MakerDAO vaults. Those can get plugged into other apps that have dependencies on it. And then DeFi, it's all these money Legos that are talking to each other. And if you can have these like cascading liquidation effects that cause, other contagion risks. And that was one of the issues with Celsius, like we were seeing earlier this week. Celsius, is the company that basically is like taking user funds, depositing it, giving them a passive income reward. So basically you could buy Bitcoin, deposit it into Celsius and earn yield. You can earn like a savings account. They'll pay you interest on top of your Bitcoin because you can't do that on Bitcoin, right? You can't take Bitcoin, run it, stake it to the blockchain and you can't stake Bitcoin. And so that's basically like a way to do it is give it to company and then you deposit it and then they'll just pay you interest. But some of what they're doing in the back end is DeFi. Okay, they're just taking it, like wrapping it, putting it into a DeFi protocol, it's earning yield, and then they're just charging a spread on that and paying back to the users. Now, when you have those contagion risks in DeFi, that can have cascading effects into some of these centralized companies and vice versa, right? If somebody like Celsius went down, then that could potentially hurt other parts of DeFi as well. Like that's another thing people are talking about is basically because you have this transparency in the financial system on chain, basically because you can see everybody's liquidation prices, you'll get to these whale games where you'll have all these big players are like, I'm going to try to liquidate that position. So I'm going to manipulate the price and try to get it down to their liquidation price so that I can just totally nuke them out. And either one, because I don't like them, Or number two, I want to manipulate the price so that it falls even farther and lower, and they can buy more crypto, and then the price goes back up to where it was, and you can make a huge, huge profit. Now, of course, it's a risky game, but there's lots of big whales who play these risky whale games and would love to liquidate a massive company like Celsius, just to say that they did, right? Or a hedge fund. So that is a risk of on-chain, transparency. So one of the things I want to talk about is with the meeting today with the Fed, I did see this take that I thought was pretty interesting. If crypto closes sharply green today, that could wrap up a period of more insane than March 2020. So all eyes on the FOMC starting at 1400 hours Eastern Standard Time, or 1300 hours Eastern Standard Time. So that would be pretty crazy if we saw crypto actually close in the green like that, and could, put us at a point like March 2020. Okay. So, I mean, that's the other thing is like what we're experiencing right now. There's so many things that are reminiscent to March of 2020, December of 2018, all these periods where like crypto fell farther and faster than people really expected, kind of out of nowhere. Okay. Because if you look back at 2017 or 2018, okay, I want to tell you about what that was like and what people were thinking. Let me just see if I can zoom in. I'll just use my crude CoinGecko chart here. It doesn't have to be super sophisticated, but let me find it. Okay. So this was the bear market back in 2018. All right. So, Bitcoin topped out basically $20,000, just shy of it on most exchanges. Okay. And, look, we did this. All right. And anybody who is, anybody who likes to use TA is like, oh man, this is like the perfect trade setup. Absolute perfect trade setup. Because look, you've got this resistance here. It keeps like kissing that resistance, and then you got this wedge basically, and it gets smaller and smaller and smaller, and the volatility is shrinking, and it's forming this nice, perfect floor. Okay, like this just looks awesome. Like I'm ready to just, people talk about the accumulation phase and how the accumulation phase is awesome, and you get so rich in the bear market by accumulating, right? And then like this is the perfect spot because you have months to just scoop up crypto. And then what happened? All right. Boom, another 50% drop, okay? And then you really had the accumulation phase and you started over again. So basically, the point I'm trying to make here is this is when people thought crypto was over, and that, we're just dead. We're going to zero. This is all useless, because you have to understand, like right here, we didn't have all the DeFi apps that you have now. Some of them were starting to come out. We didn't have all the NFTs. We didn't have we had some NFTs. We had OpenSea, but it was not the stuff that you know and use today. All the tokens were dead. Everything was just like, it felt horrible. Okay. And there's some things right now that feel very reminiscent to that. So same thing with, March 2020. If you were here during that time, then you remember this. But if not, you have to understand, like, this was not fun. We finally, after that, had started to make some progress. Okay. Bitcoin pumped up to 12.5 in 2019. Okay. And then we came back up here back in February 2020. I was like, all right, we're back at $10,000. It's time to resume that bull market. Okay. The fear of COVID started to really spread across the internet. And then we started to see it kind of get queasy in the stock market. And then boom, right? Just instant, like 50+% drop, right? Bitcoin went down to like $4,000 on some exchanges. After it had already seen this, huge dump down to $3,200. So what we're seeing right now feels a lot like those times. I'm not saying it's the bottom. It could get worse, okay, with some of the things I'm talking about, like contagion risks, what happens with the Fed meeting today. But, there's a lot of bottom signals out there. A lot of bottom signals. A lot of bottom signals. Now, as the saying goes, don't fight the Fed, all right? We are in a new regime. We have changed, like our monetary policy has changed, right? Whether it's permanent, whether it's for the next 10 years, whether it's for a short period of time, We don't know. But that's the uncertainty that is causing in all financial markets right now, crypto included. And that's the type of thing that causes people to, freak out, not want to touch crypto because they're like, hey, crypto's never survived this before. Crypto's never been in a high rate environment. But that, to me, is where a lot of the opportunity comes in. I'm not saying it's now. I'm not saying buy now, not financial advice. But that's where a lot of the opportunity comes into play, is when crypto is doubted the most. And I'm sitting here watching the tech, watching what we're building in this space, and saying, like, that's a horse that I want to stay betting on for quite some time and have exposure to. Okay. Because, the last thing you want to do is check out of this space right now, because there's so many people that are hired literally with the sole purpose of creating amazing technology that's going to draw people into the space. That's where the incentives are. That's where it's incentives for everybody to figure out what that is and to create it, because it's just capitalism, right? And, we're looking at Web3 and crypto capitalism all together, right? And then you've got so much money. You got so many people who have raised billions and billions and billions and billions of dollars who want that, exponential trend to multiply that wealth, okay? And so those are the horses that I want to bet on for sure. Despite what's going on right now, you've got people who can weather massive, massive, massive storms. There's insane demand for tech talent in this space. I think somebody was asking me the other day about, like, we've seen some layoffs from some of the big, crypto companies, but we're also seeing other big crypto companies that are like, hey, we're going to hire. So if you laid off, like, we're going to take your talent. Okay. Because, we had a lot of people in 2021, basically overhire because they're too aggressive, right? That happens sometimes, you know what I mean? And so that did result in some layoffs, but every time I see, like, somebody be like, hey, I worked at Coinbase and I got laid off, you've got lots of other people who are instantly replying like, hey, we're hiring, like, we'll hire you, like, come talk to us now. You know what I mean? There's people who are hungry. There's still a massive talent shortage in this space. There's tons of resources to put that talent to good work, because they all need that as they're, to multiply what they're building over the long term. It's ultimately going to bring people in the space. Someone says capitalism equals centralized. That's not necessarily true, right? Crypto essentially crypto is one of the only, like, true free markets, on the face of the planet, right? Where you don't have a massive amount of regulation, where capital flows freely to the best ideas, at least in the short term, right? And can move fast without cumbersome regulations. Now, I think the regulations are coming. We do have some regulations. Like, there's a lot of stuff you can't get away with in crypto, but it might take you some time before somebody comes knocking on your door to hunt you down. What's a good way to DCA? So I can tell you how to DCA, but I can't tell you what to buy, because that'd be financial advice. But basically, a good way to DCA is to buy, divide up how much you want to spend, and then you divide that across, certain amounts that you want to deposit. And you could do it one or two ways. You could basically plan for certain price levels that you want to buy in, and then buy in there, although you may not be able to hit those. Or you basically can, you could buy on a regular schedule and not try to time it, right? Like, just say, I'm gonna have this much set aside. I'm gonna divide up in this many increments. And I'm gonna, DCA daily, weekly, monthly, or I'm gonna wait for certain price levels. But the whole thing is, you may not hit the price levels that you're looking for. Okay. There's other advanced strategies, okay, where basically, like, you could have a certain amount that says, okay, I'm going to spend this much if it gets to this price level, but otherwise I'm going to take this percentage and, like, just do it on schedule. And if I don't meet my price levels in a certain amount of times, I'll just keep riding it up, at certain levels. So anyways, like I was saying, things could get ugly today with the FOMC meeting. We'll have to just wait and see, okay, what the outcome of that is, how the stock market's going to react to it, how crypto markets react to it. I do think we get to a certain point where we start to see less correlation with crypto and stocks, where, like, crypto just gets so beaten down that, it just kind of becomes its own thing. for at that point, where essentially, like, if crypto could find a bottom, like, stocks could still potentially, kind of be making up their mind, and crypto could not be just like tanking. But we'll see, right? We'll see. So watch out for that. We're gonna check on the Fed meeting today, see what happens. Let me know what y'all think in the comment section below. What's gonna happen? You can follow me on Twitter. We'll be watching this stuff as it comes out. I'm at Dapp University on Twitter. And like I was saying, this is the perfect time while the space is quiet, because the real future of the crypto space belongs to the builders, the people who can get in there and get their hands dirty with the technology. At the end of the day, that's exactly what I teach you how to do in this channel. And so if you want to take advantage of that big opportunity, then definitely go check out those free courses on my YouTube homepage. They're like Udemy courses, but they're totally free. They're going to show you how to build your first blockchain application, get familiar with the fundamentals of the programming languages and the technologies that you use as a blockchain developer. And if you like those videos and you want to take the next step, or hey, maybe you take a master shortcut entirely, I, of course, can show you how to become a blockchain master step-by-step, start to finish, over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. And until next time, thanks for watching.